Hey guys, this is Nick from forexfornoobs.com with a live trade video. Today is Wednesday the 30th of August 2017, time is 21:56 here in the UK. I'm rushing because this trade's already kind of triggered and I haven't actually entered, so I'm just going to enter real quick. Damn it, I messed something up. All right, my entry is significantly later than I wanted that. The reason it's late is because I wanted to shoot this live trade video, and by the time I got the recording up, my entry has already been triggered. So this is kind of annoying. This is the price of doing a live trade video, I guess. Just give me a second. I'm probably just going to pause while I set up my stop loss and everything like that. I need to adjust this to my actual entry now. It's going to have a kind of a significant impact on this trade, but whatever. What's done is done. I might have to tighten my target a little bit, to be honest. I might change that later. Just let me put this information into my trading platform. The reason I'm doing it like this is because this is my charting platform, tradingview.com, and my actual trading platform is a completely separate platform. So I need to copy over the information to my actual trading platform. They're two separate platforms. I don't trade and chart from the same platform. Anyway, I need to add in a stop loss for this trade. And I'd end the take profit real quick. So this isn't the most organized of live trade videos, but doing that right? Yeah, I am. Cool. All right, so I'm going to explain this trade now that everything's set up. So why am I taking this trade? We discussed this trade in today's analysis. I shared this potential setup and I said that I was planning on entering. So I said I was planning on entering on the 12-hour if it triggered, and now it's actually triggered. Now it's started to push down. We're going to pull that stop loss up a bit. So basically what this trade is, it's a standard reversal trade that's counter trend. Now, a lot of people don't like trading counter to the trend, but I don't see really a problem with trading counter trend as long as you have a tight target, as long as you know what you're doing, as long as you know what to look for. In this specific case, I think trading counter trend's not that bad. This is what the trade is probably going to look like in terms of where my target is, where my stop loss is. My stop loss is there, but this target, I need to tweak it a little bit. The reason being that I got a late entry, like I said, so I am not too sure if I'm going to keep the original target before the late entry or if I'm going to also extend my target because my entry is later. So we'll see how that goes. But let's just keep it like this for now. This is what the trade looks like. Got a stop loss up here. Entry price is around about the 130.98. And my target is around about the 129.82. So what I'm looking for is a quick reversal. So we have a nice strong bullish preceding trend. We have indecision forming on top of this strong resistance area. This resistance area has a history of reversing price. Looks like it's about to do it again. All I really want it to do is push down to here. So I'm not really asking for much of sellers. They just need to push it down a little bit. They don't need to push it down too far. Now, the reason for that is that Euro is arguably still in a pretty strong uptrend. So the fact that it's in an uptrend makes me think that, or makes me not want to go in short all the way to this support area. Now that may change depending on how fast it reaches down to my target. What I'm going to do, and this is what I usually do with trades, is I'm probably going to set an alarm around about the 1.300 1.30.00 level. I'm going to set an alarm here. When price pushes down to there, I'll reassess and I'll decide if I should extend this target. So I might pull this target down to here. I might pull it down even a bit further. I might take out part of this position and then I'll leave it to run. There's so many different ways to manage a trade. I'm not really sure how I'm going to manage this one if it does approach that target. But yeah, this is the trade for now, and I'll update as it progresses. Okay, so let's do an update to this trade. Normally, I like to update on trades pretty much daily when I'm in a trade. So when I'm doing a live trade video, I try to do updates daily, but it just hasn't really happened with this EURJPY trade. I've just been really busy. I was really busy last week, so I didn't really get a chance to do any updates on this trade. But yeah, well, I'm doing an update now, so let's analyze what's happened since this trade's been taken. So pretty much when this trade was taken, it reversed immediately. It just went bam, reversed immediately, and a few people who joined me on this trade exited here. Now, exiting here is just a bad decision. That exit is based on fear. And when you trade based on fear, it's going to have a hugely negative impact on your account. Now, of course, in some situations, exiting here would have saved you money because it would have kept going until your stop loss. But not always. Overall, if you do the math, if you do it for long enough, if you have, let's say, 100 trades and you look at what exiting early actually does to your account over the long run, it's going to cost you money. I've never seen early exiting out of fear. Now, this has nothing to do with early exits that are planned and logical. That's completely different. If it is part of your trading strategy, your risk management strategy to exit early, and you have clearly defined criteria for exiting early, then that's fine. But when you exit out of fear, that's going to have a negative impact on your account. And you will notice that if you properly track and journal your trades, and then you look over that data, you will notice that. So anyway, I didn't panic. I didn't like it, of course. It's not like I was ecstatic that the moment I entered here, it turned around. It's not like I was happy, but you know, I just recognized that this is part of trading. So I just said whatever, and I let it run. The other thing is that this is resistance. So price was still inside of resistance. It was still in resistance. So there were still sellers here that were preventing buyers from pushing up too far. And as you can see, overall it worked out. It started pushing down in my direction, which was great. Awesome. And the next thing came up where a few people abandoned this trade, and that was NFP. Now, I'm going to quickly explain my my news theory. This is what I call it. It's my theory through trading through news. I'm not going to tell you the whole story because it's going to be too long, and I don't want this video to end up being really long. But basically, this is how I handle most news releases. And when I say most news releases, I mean news releases without the human element. What is the human element? The human element is when a person is talking. So that is speeches, but that is also meeting minutes. So when you get interest rate announcements, usually you get minutes of the interest rate announcement meeting. That can be, that has the human element because that's people talking. That's a record of what people have said. So that can have a surprise impact on the market. But when it comes to pure numbers, like the NFP report, usually I just trade through that. I didn't used to, but I do now. I have been for the past about 2 years, I think. Now, let me explain why. The reason I trade through NFP and I ignore NFP is because I believe through my last 16 years of trading and watching the markets, that price action is a great predictor of what a news release is going to do. Now, why is that? Because the only reason we're seeing this indecision candle form and price stall at this resistance area. The reason we're seeing, it's not the only reason, sorry, I misspoke there, but the reason we're seeing this, or we were seeing this at the time, was because people were selling. They were closing out their buy trades. So they were long and they were closing out their long trades, and they were starting to enter short trades or just closing out long trades. So what does that mean? Because when you think about who moves the market, overall, who moves the Forex market? It's the banks, it's the hedge funds, it's the big boys. If the big boys are closing out their buys and they're starting to sell, they're starting to short, what does that tell you? That tells you that the big boys expect the NFP result to push price down. So they're preparing for that, right? Now you might say, how would they know? They know because they spend millions per year on analysts and news data. So they spend millions per year on data and for employers to analyze that data. So they know with a high degree of accuracy what a news release is going to do before it does it. The only time, well, it's not the only time, but they do tend, it is possible for them to get surprised by reports with the human element, because no one can predict exactly what someone's going to say. Someone might meet, let's say the central bank leaders, the US central bank leader, let's say she misspeaks. She just says something by mistake that traders take the wrong way and it causes a big spike. You can't really predict stuff like that. But when it's numbers, when it's an NFP report, that can be predicted if you have enough data to look at. And you better believe that banks and hedge funds are spending millions on that data and the people, the experts to analyze that data. So they already know the NFP is going to push price down on, and I know this isn't a USD pair, but you have to understand that in the Forex market, USD news moves every single pair because USD has an impact on every single currency pair. So it doesn't matter that EURJPY is not a USD pair. Just keep that in mind. So when you start seeing indecision forming on just before NFP release, it usually means that NFP release is going to cause a reversal. It's going to push price in that direction. So long story short, or no, I've told a long story really, but I held through NFP because whatever. I believe that NFP was going to push price in my direction, and it did. It did. It didn't push it much, but that's probably because this is a EURJPY trade and it's not a USD trade, so it's going to have like less of an impact overall. But it did push it in my direction, so that was great. Then the weekend came and it gapped pretty low, gapped down to here. And now it's pulled back up a little bit from the gap, but you know, that's normal. A lot of the times when you see a gap, it'll come back up and close that gap. That's a common thing that you see. So I wasn't too worried. I haven't exited yet. I've still got this trade open. I'm just going to leave it open and see how it runs. You know, I do still think there's a strong chance that it's going to head down to my target. I'm going to keep it open. It's in profit now. Okay, guys, as you can see, the target on this, actually, let me move that back. The target on this trade has been hit. Now, I'm going to quickly explain how I handled this trade, why it was closed out. I believe that this is probably going to continue down, and I think there's a strong chance it's going to continue down. And I was tempted to extend my target on this one, but the decision was made for me because it hit my automatic take profit. But also, I'm apprehensive. I would have been apprehensive about holding on to this trade because of all the news out of North Korea. That North Korean news has a big impact on the yen, and it's not unlikely this week that we're going to get some more news from North Korea that could have an impact. So even though this trade was closed out automatically and that I think it's going to probably continue down and that I would have considered extending it, the decision was made for me because it was closed out automatically. And even if it wasn't closed out automatically, I might have decided to exit just because of the potential for surprise news in relation to North Korea that could cause, you know, a big gap up or a big gap down. I don't like trading in uncertain times for pairs. And right now, the yen is uncertain because any news from North Korea is probably going to have an impact on the yen. I mean, it already did. We saw that this weekend with this huge gap down. It's not completely unbelievable that we might not get a huge move up. So anyway, let me explain how this trade was closed out and why it was closed out real quickly. I can't remember my exact target. Let's just call it, let's just say here, just for example. It doesn't really matter too much. I'm just going to explain just a quick little trick to managing trades, because some people asked me about this today and I was surprised that other people don't use this method. So I just want to show you guys this real quick. This is generally how I manage my trades, right? This red line that I've put there is an alarm. It's not a real alarm, but let's just imagine my alarm would be there. What's an alarm? An alarm is just a chart alarm. It rings on your phone or wherever you have it set up. It sends you an email, it sends you an SMS, whatever, when a specific price point is reached. So usually on a trade, what I'm going to do is I'm going to set an alarm and I'm going to set a take profit. So my take profit would be here, for example, and my alarm would be at the red line. Take profit is a black line, my alarm is the red line. What this does, it allows me to get back to my charts and check what is happening when price reaches here. So let's say price reaches here, the alarm rings, then I can get back to my charts before my take profit is hit and assess the situation and decide if I want to extend that take profit, if I want to pull it down to here, if I want to pull it down to here, whatever. I can decide because that alarm has rung. And it has given me time to actually check in on the trade. Now, in this specific case, I was out for a run, so I didn't really get the alarm ringing until it was too late. The target was hit, but you know what? That's completely fine. When I enter a trade, I set a target, so as long as my target is hit, I'm happy. Extending that trade is just a bonus. I wasn't able to extend in this case, and even if I was at my even if I was looking at my charts on my phone or at my computer, I might have decided not to extend because of the North Korean news. So yeah, I mean, ended up being a profitable trade, hit my original target. Actually was a bit better than my original target, actually. So yeah, I guess that wraps up this trade video. Actually, I just want to quickly talk about a little bit what I talked about in the previous update, and that's people freaking out on this trade. People freaking out and closing out early. There were 3 freakout points in this trade. What's a freakout point? A freakout point is just a point on a trade in which people freak out and they close out early. Now, this trade was not a nice looking trade. It was not a picture perfect trade. It took a while for it to hit target. It just wasn't like really a great looking setup. But this setup was one of those that really separates inexperienced traders from experienced traders. This trade had 3 distinct freakout moments. Freakout moment number 1 was this one here. This one got most new traders. New traders, and when I say new traders, what I mean is people on my forum who were taking this trade with me. People who were messaging me on Skype. These people I was actually talking to. These inexperienced traders, they freaked out and they closed out here with a loss. On a trade that should have been profitable, they closed out with a loss. Freakout moment number 1, they closed out with a loss. Some people freaked out just before the NFP release and closed out. You know, that one's more understandable. I totally get why someone wouldn't want to hold a trade through NFP if they have the potential to close the trade out at break even. So I can't really fault those people who closed out at break even because of the NFP release. It's a pretty major news release, and also because of the weekend. They didn't want to hold over the weekend. So I can't fault those people. That was freakout moment number 2, but that one's cool. Freakout moment number 3, which I've already discussed, was when price turned around and came back up. Bam, it came back up to here. Now people freaked out and they closed out early with like, what, less than half of what they should have taken, maybe even a quarter of what they should have taken in this trade. That was another bad move. The trade was in profit. Just because it pulls back up a little bit, it doesn't mean you should freak out and turn around and exit that trade. Just because it turns around a little bit. That's not how you trade. I'm going to tell you one quick little secret to trading. It might not sound good, it might not sound flashy, but I'm not here to tell you stuff that sounds good. I'm here to tell you the truth about trading. Truth about trading. When you enter a trade, you need to consider the money you've entered already lost. So your stop loss is here on this trade. That money is already lost. It's gone. That's how you have to think about it. You think about that money as already gone. You don't freak out and try to save some money when it pulls back against you and it gets to here. You don't freak out and try to save some money. That's not what you do. That money is already gone. That's how you have to think about it. So a lot of new traders, a lot of inexperienced traders, Forex Mastermind members on the forum or who messaged me on Skype, they closed out here and they lost money on a trade that should have been profitable. Now just think about what that means. Because I've said this before, you give an inexperienced trader a strategy with a 90% win rate, and 90% win rate, I'm not saying strategies with 90% win rates exist. I'm not saying I have a 90% win rate. I'm just saying this for an example. Give an inexperienced trader a strategy with a 90% win rate and give me a strategy with a 90% win rate. And this is not me bragging either. I would be profitable with that strategy, whereas the inexperienced trader would lose money. And why would that inexperienced trader lose money? Because they would freak out at points like this and close trades out early, whereas I, as an experienced trader, would keep that trade open. Worst case scenario, it's going to hit my stop loss and then it's a losing trade, but losing trades happen and I know they're going to happen, and I've already accepted when I enter a trade that there's a very real possibility that that's going to end up being a losing trade, and I already consider the money I've entered into that trade lost. So anyway, without letting this video get too long, I just thought this video really illustrates why you shouldn't let fear manage your trades. When you let fear manage your trades, you end up losing money on a trade that should have been profitable. Don't let fear manage your trades, guys. Thank you for watching. I hope you found this video useful, and I'll see you in the next.